Hi everyone, it's Phil C. Grateful to be here with you for another edition of the Start Trading Overview. I appreciate every single one of you for taking time out of your day and coming in and joining me as we take a look at my portfolio and see if we can see any potential trade setups for the coming week. And one of the things that I want to point out today is about structure, because structure is key. Price action acts like a magnet to these levels. And I want to show you this because people often ask me, it works in the forex industry, but does it work in other things? Does it work with futures? Does it work with stocks? Does it work on crypto? Does it work with Bitcoin and Ethereum? It works on any time frame and in any market. And what I mean by works, you see structure play out everywhere in the markets because it's not a random minefield of chaotic movements. There is structure and order when it comes to any market. So let's take a look at that together to the chart. And what we can see in front of us right now. I will just, before I get to the portfolio really quickly, I will point out the Bitcoin chart and the Ethereum chart, right? And then we'll get to my portfolio and you'll see the exact same things play out in regards to structure. These, if I zoom in here, this line and this box, you can see it right here. Right there. So this line and these boxes, these are zones that I create on the chart. And these zones represent structure, levels of structure. Okay. Now what structure levels are is support and resistance levels. So that's what structure is in the markets, right? Price action you can see has tested here and price action is testing here. So if I zoom like this, price action acts like a magnet to these levels. See how it pulls price action to this level. And over on the right hand side, it pulls it down into this level. And you can see this in any market, any chart, on any time frame. These structure levels, they pull price action. If I zoom out, again, we're on the Bitcoin chart here. You can see that we came all the way down. Look at that wick right there. We came all the way down and hit this level. We came here, hit that level, and then the other two levels that we're hitting. So structure there, 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 there. So this is resistance and that's support. We have a resistance level, which becomes support, okay? Resistance becomes support. This is a level of structure. I just wanted to demonstrate that because that's what the lines and the boxes are on every one of my charts. And I use structure with my strategies to give me, which is the point that I want to make here. Structure, the significance of it gives you great probabilities in terms of risk to reward, okay? Because if price action comes down into this structure level, we can look for a potential buying opportunity right here, okay? Because if price action has tested this level, this structure level, we know history tells us that price action reacts from that level, right? So if price action comes all the way down into our new support level right here, we can expect the market or predict. We don't know where the market's going to go. Again, it's all probabilities, right? We can predict that price action moves towards the upside, which is another level of structure right here. If I drop in a line tool, and then I draw this up like this, and then we scroll left and look at this. Always look left for structure. If we get a move all the way back up into this high, right here, if we look left, we have structure right there, okay? What does that mean? If price action comes into this area, it's most likely to react. Therefore, we can look for a buy opportunity all the way up into this level, okay? Because then one or two things will happen. Price action reacts from this structure level. Either we blast through and you would be hitting double targets if you know, you follow me and know the strategies that I trade, or price action will react and come all the way back down into this level. Okay, so we have support here. Now we have resistance, right? So if price action breaks and closes above this high, then this resistance becomes new support. So now you can start to predict, right? Because history tends to repeat itself. And that's what we're doing here. So previous resistance becomes new support. Now we expect the market to come all the way back down into this level right here. And if it gives us a pullback, right, and we break these highs, we can use structure to get involved in a buy opportunity, right? So we would look for a buy right here, all the way back up into these highs, looking left. And that's what the trend continuation trade is. We're using structure. We're reading the language of the markets. We're reading price action, and we can start to predict, okay? Now, if you come up with a really good strategy and a risk to reward where you're about 50% accurate and you're using these structure levels as entries, okay? And over time, let's say you're 50% accurate, over time, you win more than you lose because you have good risk to reward, because you're using structure, because you understand structure. Now you have good probabilities in your favor to make profits from the market in a predictable fashion. Why? Because we're using past performance. We're using human behavior. Now it's important to note here that past performance is not indicative of future events. I get that. But it's the only measuring stick we have. And if we use it properly, and you come up with a good strategy with strict rules, and it's testable, verifiable, and repeatable, then you can start to predict your own success in trading, right? And that's what we want to do. So as you can see, price action coming all the way down on Bitcoin right here. We're looking for a potential buy. Why? Well, price action is in the direction towards the upside. But what if we get a move all the way down, closing below this structure level right here? Well, the same thing applies. We expect price action to pull back into this level. So previous support would become new resistance, okay? And then we would look at our previous low right here, right down here. Where is our next major structure level? This is where I'd be looking for price action to move all the way down into. Why? Understanding structure. And if you know these structure levels and you go out to any chart, any time frame, I implore you to go do that and watch how it plays out time and time and time and time again. And if you want to learn the language of the markets in terms of understanding structure, reading structure, you can do so with the link in the description below. I have it on the platform. along with price action, along with structure, and along with the trend continuation trade. All right. So if you want to do that, link in the description below, and you'll get access to videos showing you how to do that. And then go out and do it yourself over and over and over, and you'll see that these structure levels act like magnets. It really is amazing. So that was Bitcoin. Ethereum. Ethereum is the same thing right here. We scroll out, we drop in a line tool right here. I draw in one of these right here. Okay, so we come all the way back down into structure right now. So we have a test here, here, inside here, here, almost here. Right? It's important to create zones. The market is imperfect, right? So it's important that we create these zones. These are levels of interest. Right here, we didn't quite make it there. Then we get a test here. Then we get one here, couple in there, then that big wick right there. So this is an important level to pay attention to, right? Because now you can set up a really good trade towards the upside. Drop in your dealer thingy here. So a retest of the highs, right? If we're looking at a trend continuation trade, let's zoom in here. Using structure, reading price action, heading towards the upside, right? We're making highs. We break, get rid of this price action, moving towards the upside. We get a pullback here. We come up into a decision point, right? One or two things happens here. Price action reacts and moves towards the downside, or we get a move towards the upside, what we were talking about before. And then we get a higher high, higher close above this high, right? So previous resistance becomes new support. So price action pulls back into that level, right? And then we get another move towards the upside, breaking above these highs. And then we get a move all the way back down into this level right here. So these are our lows right here. So again, if we use the previous example that I just covered, if price action moves towards the downside and we close below this low looking left, then we expect or predict, right? Price action may, it's always probabilities, guys, always. Price action may pull back into this level, and then we might get a move towards the downside. If that is true, then we would want to get out of the trade, our hypothetical trade. That's what we would want to do. Want to get out of the trade because most likely price action pushing towards the downside, looking left. But getting back to our trade example, right? There are our lows, okay? So want stop placement below these lows and give it a little bit of breathing room. Don't just have it all the way down here, right? Price action may spike right down into that level. So you give it some breathing room, okay? Right here. And then where are our targets? Well, a retest of these highs looking left, right? This is the trend continuation trade. So we're getting long here. Hypothetical trade for the purposes of this example. Getting long at this level. So looking for a retest towards the highs right here. Okay. You have a 2-to-1 risk to reward on this trade because you understand price action and you understand structure. Now you can use that knowledge to come up with a strategy called the trend continuation trade. Again, you can learn this. It's about 50% accurate and it's really good risk to reward. And over time you trade this with discipline every single day and you can make money with this strategy. Again, understanding price action, understanding structure. We have a good risk to reward. Now we have a trend continuation trade strategy. Okay, so you have a 2-to-1 on target 1, right? So if you're right 50% of the time on this kind of trade, mathematically you have an edge in the markets. And that's what trading is about, risk management. Not how much money you're going to make. It's what is my risk? That's what professional trading is. How much am I potentially going to lose on this position? And always have a target, always have a reward higher than your risk. And then test that to see if it's 40 to 60% accurate on whatever market you want to trade, on whatever time frame you want to trade. That's it. Find that it has an edge. And you take that trading plan and then you trade that every single day. Now you have a positive expectancy. What does that mean? A mathematical proven probability that you're going to gain more than you lose. In other words, it's a winning system. Trading doesn't have to be that difficult. It's quite simple when you go back to the basics. Just understanding price action, understanding structure, develop a strategy around that. Test that. How often am I right on this strategy? And your data will tell you that. Now you have something that you can make money with moving forward, right? So I just wanted to cover that really quickly. Now let's take a look at the portfolio really quickly. So here on the Euro Yen, we're still in this trade. Well, we're still in this example from last week, and seeing if the Euro Yen can head towards the upside from here, or we might get a little pattern trade within there and completely turn around all the way down into 143, let's say 143 200s. Yeah, so not much happening with Euro Yen. May get a little pattern trade on a lower time frame down there. And heading over to pound dollar, we had the same thing play out. Exactly what we were talking about play out here. Again, we're on the dollar, what are we? Pound dollar, excuse me. Pound dollar, right here, we're going to move towards the upside. Okay, swing low to swing high, we come all the way back down into this level. Give yourself breathing room below these lows. Again, the example I was just covering. And then we're going to move towards the upside, where these highs, a retest of these highs looking left. So this is another trend continuation trade towards the upside. This is on the daily time frame. Okay. And my day trading time frame, I had these little drawing there. On the daily time frame, if you go have a look at the Star Live day trade video that I do, you can see that I was live right down here. So I got long right here on a lower time frame. And this worked out to be about 250 pips on that trade. It's ridiculous. Trend continuation trade, good strategy. So I was long right down there. We did come up and hit target ones, which was about right here. Again, you can have a look at the previous video I did, and I covered that. I walked through that. And then we had target twos right up here. So there's a really, really, really nice trade there. So that trend continuation trade paid big time. Why? Because patience pays. That's why. And now we get rid of that trade because that one's finished. Once the trade hits targets, or once it hits stops, that's it. It's finished. The next potential trade I'm looking at on the pound dollar is a Fibonacci swing high all the way down to swing low. We have a 618 right here, which is our B point. And then we have another 618 right down here, which is our C point. So what I want to look at for the next coming week as price action moves up towards these highs into the 786, I'm looking for a potential Gartley pattern here. So Fibonacci extension tool, swing low all the way up to swing high, back down in. You can see that we have a 127 and a 786 right here, okay? So this is my potential reversal zone right there. This is where I expect price action to retrace from. So we get a move up, pull back down here, and then we get another move up. I'm looking for price action to retrace back down into where? Look left, right here. Structure here, and if I extend this right out like this, you can see that we have structure here, 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 a little bit in there, here, and here. So if price action moves up into this box, I'm looking for a sell all the way back down into this structure level right here, and potentially right back down into this level here, right there, in the form of a Gartley pattern, right? And that would look like this. So if I grab in our pretty triangle tool and go from X to A to B, B to C, C to D, B to C, C to D, I'm saying that too fast, right there. This is where D point completion at the 786, 127. This is where I'd want to get involved in. So if price action can push up a little bit higher, we're looking for a retest back down into 382s, which would look like this, okay? So here are the targets, swing low to swing high, right there. Swing low to swing high, so a little bit further than I said. So target 1 would be at 382, make this green, like that. Target 1 would be at a 382, and then let's duplicate this, move it down to the 618, and that is where target 2 would be, right? So entry point would be in this box at the 127 Fibonacci extension. And then I'm looking for a move into the 382 and potentially a move into the 618. So that's the second trade opportunity that I see on the pound dollar. But again, really good good trade, about 250 pips off that if you want to check out the last video. Heading over to the pound yen, we didn't. Now, staying on the example at the start of this video, we didn't get a pullback that, right down into this level, okay? We didn't get a pullback down there. We got a little shallow pullback right down into here, okay? So we did touch these highs right there, okay? Price action did touch this, so here is our high. We came up, then we came all the way back down, then we touch this, and then we shoot towards the upside already, right? So we have a close above. See this candle here? Closing above these highs right here. So then we are waiting for the same thing to play out. We might get a pullback into this level right here and look for potential long opportunities. Or we might get something like this, okay? We might get price action pulling back, potential head and shoulders, and then all the way down into 171s, 500s on the pound yen. We'll see how this one likes to play out. All we do is be patient. That's what we do. We don't force anything out of the markets. We don't make up things. We stick to our plan of what we have tested, and we wait for price action to come to us, okay? And until then, we just read every candle. We read every story. We read every movement. New structure high, we wait. That means we are continuing towards the upside. Price action closing above the highs means we are heading towards the upside. So that's it for the pound yen. Heading over quickly to the dollar yen. I'm not going to touch anything here, right? We are just moving sideways like this, and then sideways like this. As you can see right here, price action come all the way down, retesting this high. Sorry, and zoom up for you. We come all, here is our highs, and then we come all the way up, and then we come all the way back down, retesting this structure level right here. So moving towards the right side, where else? Moving along, and we will wait to see how this trade comes along. This was a Gartley pattern, entries at the 127, and then targets remain the same, 382, 618. So that is dollar yen, not much there. So over on the Aussie dollar right here, we are looking towards the downside. We can see price action moving all the way down like this, giving us a big impulse leg. Price action moves all the way back up, and then we get another leg down right here. So price action closing below this low right there. And then price action moves all the way back up into this level of interest right here. Okay. So as price action moves up into here, most likely price action is going to react, because it reacts here, 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 and here at this structure level, right? I was actually looking at a short opportunity last week right there. But now we are sitting at a 786. So this would be a at market, if you will, right there, trend continuation trade. Now, remember, 50% accurate. What does that mean? If we go short, there is a potential for price action to go towards the upside, breaking above these highs, retracing, and then towards these highs. That is a possibility. But we play the probabilities, right? So let's have a go. Here we are, 786, trend continuation trade. Well, is my short right here. So here is my short at the 786. Stops are where? Above these highs, not down here, right? Give it some breathing room, okay? Right there. So we want stops above this high right here, okay? As price action pulls back, we enter, so we know where we're getting in at the 786. Our stops are above these highs. We know where we're getting out if we're wrong, right? Price action moves all the way up here, and then we want to get out of this position. And then where are we getting off if we are right, which is way down here at the lows looking left. So I want a retest of these lows, right? So again, 50%, trend continuation trade. What do we got? A 1.5 risk to reward here. That's good. We take those, okay? Every single time that price action presents this opportunity, we want to take those. So that's target one. We want to duplicate this, move that to the side, because we're taking two targets here. So target one is looking good, 1.5. Where are target twos? Fibonacci extension, swing high, all the way down to swing low, back up in, okay? And I'm going to drag my target two all the way down into the 127. Now, again, not at the 127, just before the 127. Let's say 63,810s, okay? Why? The market is imperfect. That's why. And we want a good chance to be filled, playing those probabilities. So here we've got a potential trend continuation trade on the Aussie dollar. We could get a move towards the upside because this could be a false break towards the downside right there, below that low. Excuse me. But we are in, and see if we can get a good risk to reward on this trade with the Aussie dollar, depending on how price action wants to play out from here. So that's a trend continuation trade on the daily time frame for the Aussie dollar. The Kiwi dollar, how freaky it was that this played out. If you had if you remember from last week, price action came down and we had a pullback right up into this level. And I said that the bat pattern could be predicting too far into the future. But it's funny how it seemed to have played out perfectly. So price action came down, giving us this impulse leg here. Then we get a pullback, and I said we may get a move down here, testing these lows right there. And then we may get a move towards the upside. I mentioned that in last week's video. And price action seems to have played out in that way. And if you do this for a very long time, you see that all the time. That's how that happens. Lots and lots of chart time. Yeah, that tends to happen. So now we may get a move all the way up into our all the way up into our 886, giving us a CD completion. If that's true, then we have another Fibonacci retracement, swing low to swing high. Okay. We would have entries right at the 886, or just before, excuse me. Right there. Entries at the 886, okay. Stops above the, excuse me. Stops above the X point looking left, right? Right there. And then targets at the 382 and target 2 at the 618. That there is a potential sell on the Kiwi dollar, daily time frame. Potential sell on the Kiwi dollar in the form of a bat pattern right there. Entries 886, target 1, 382, target 2, 618. That would be my next opportunity watching the Kiwi dollar here. All right, so we're headed over to the Kiwi yen here, and just want to recap or touch on again what I said at the start of the video, and that's structure, right? Structure. Here, 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 all in here, right? Make that blue. Then we got to touch here, here, almost there, and then here and here. Scroll left. Well, you get the idea, right? You go see this everywhere. As I mentioned, every chart, every market, every time frame, structure plays an important role in price action. So we have our lows right here as well. So I'm going to copy this. A level of structure down there. And then I will put in another one here. Up the top. Right here. Yeah, so we got our structure level down here and right here and right here. This is Kiwi yen on the daily time frame, and we have a little bit right in here because might get a head and shoulders setting up, and then might get a move all the way down into 82's even handle number. So that can happen, or we can get a move towards the upside here. So we have price action, the starting point down there. We have a pullback here. Then we have a move towards the upside, and then we get a pullback. And then we have another move towards the upside, and then we get a pullback, right? So as you can see, understanding structure and price action and setting up these really good risk to rewards, your stops would be below these lows. Again, I'm doing this just to stay on theme of today's topic, which I think structure is very powerful. So you're looking at over a 2 to 1, or almost 2.5 to 1 on this trade, right? And then target 2s would be 127, right up around here. Which, giving you an amazing risk to reward. Is 100 pip risk for 270 pips just on target 1 alone, right? And on a strategy that's about 50% accurate. So that's why I keep talking about this. And that's what's so powerful in trading. You don't have to overcomplicate anything. As long as you're willing to just put in the work by doing the right steps. And that means learning price action. That means learning structure. That means learning a strategy and just testing that strategy. Know that over time, you gain more than you lose, being about 50% accurate. And then trading that edge. And then making money and making profits in the markets. Month after month, year after year, for as long as you have passion in the markets. And I believe that if you're watching this, you truly do have a passion for the markets. Yeah. So all it takes is you doing the right steps, putting in the work, and then trading that. Instead of bouncing around from indicator to software or AI bots or whatever shiny thing that's happening right now. All because they want to market to you and make money off your expense. Which I don't want anyone to go through that. There's no shortcuts in trading. This is going to take you a little bit to get. That's the hard part. But it becomes easy when you have a plan and you start trading that plan every single day. And you follow that with discipline. The hard part is putting in the months of testing. But once you get through that, once you have all of that, at least you know that what you were trading, every time you put money to risk in the markets, you know that at least you have an edge doing that. And it's an emotionally liberating feeling to have that. And to trade like that every day. That's the only way that you're going to become consistently profitable trading the markets. But it comes back to understanding price action. It comes back to understanding structure and how to use that to form a strategy that you can go and test and know that, hey, every time that I take this trade, I seem to gain more than I lose over 100 trades or over a 12-month period. Now you have that edge. Now you have something that you can go out and trade and be consistently profitable with. And I wholeheartedly and truly wish that for you. And one of the reasons why I do this video every week is to go through my own portfolio and my strategies that I've tested and showcase to you consistency of doing that. And how powerful knowing the language of the markets is. And anyone can pick this up. Anyone can learn that. So that's it. This is a longer video than I thought it would be. And I apologize for that. But I trust that you find a ton of value in this. And I really enjoyed doing this for you, and I know that I've hit on some important topics that you can take away. Oh, speaking of taking away, if you do want to learn price action, structure, and the trend continuation trade, the link is in the description below. There is a platform I put together, free to sign up. Go through the material, and I trust you will enjoy it. If you need help with anything, there's also a chat available in there to talk to me anytime. And I'm more than happy to sit down with you and help you out. That is why I'm here. And you can do it. I believe in you. I just need you to believe in you too. Until next time, be safe, enjoy life, and I'll talk to you soon. Thank you so much.